So we are looking at 22nd of September 2025. It's a Monday, and we have a little bit of time before we open up in the index, which is open at 4:30 my time. So there we go, we've opened up. So basically what I normally try to look at when I look at price action, when I look at the charts on a day like today, it's September. We've been going higher on the weekly charts. Normally, I don't like to talk about what I anticipate on the weekend because when you study price action or when you have experience over price, when you know what price is going to do because you've been looking at it for a long time, when you have past experiences, it's really a very easy task to come up to a conclusion that price is going to do very specific things. So we've been going higher for in the weekly chart. I'm still bullish on the weekly, but this is the last week of September. Yes, so next week we're gonna have October coming in. So this last week of September, I want to be very careful because we've been trading at all-time highs, and we've just opened up right here. So this is the 931 candlestick, and we are trading higher into this 15-minute efficiency. So anyway, we've been trading higher on the weekly chart. Um, we've been trading to all-time highs. September normally the market is very bullish, and this September has not really been an exception. So we opened up right here today. It's a Monday. We have the midnight New York. Let's look at a 5-minute chart. We have the midnight New York opening price for today, this Monday. So this is the opening price for the week, and we are looking at. I want to look at where we've opened up in terms of the the opening range gap, and then I'll go into that 1 minute time frame to look at the fast presented fair value gap. So I have relative equal highs here. I've already talked about how we are bullish. I'm anticipating also a bullish week. Let's look at a weekly chart briefly. This is a daily chart. Let's look at a weekly chart. So you can see we've been going higher. We ran into these highs here in I think this was early February. So we ran into these highs here going into this is July. Is it June or July? June, July time period, and then we'll be trading higher since. So went into a consolidation here. We tried to have two down close candles here in August, and then coming into September, you can see this is the first week of September, ran higher, second week of September, third week of September, and now we are in the fourth week of September, and we're still I'm still bullish on the weekly chart. So I'm also anticipating a very standard bullish candlestick on the weekly chart. So going down to a daily chart, let's look at daily chart like this. So we opened up this today's price action right there. We are now trading on the opening price, and then we met the Jura swing trading into Thursday's premium week. So we went into the midpoint of Thursday's premium week. That is, if you look at this midpoint of that week, I'm gonna measure that now. So that is 24,524.3. So 524.3. We're into 524.3. It's right around here. 524 around here. So we're into that midpoint of Thursday's premium week, and then we had this run higher, an inversion for value gap here. We ran higher. I was trying to buy here in London. I had a buy here in London, and then it was obviously successful. I got 10 points out of that run higher, and then that was it. So we ran higher, ran through this 15-minute sell-side imbalance based on efficiency, and then going into the New York session, we've run into this inversion for value gap on the 1 minute. Let's move to 1 minute now. So we ran into this 1 minute, 15-minute, 1 minute inversion for value gap right here. You can see it's right here from London. Right here, this sell-side imbalance based on efficiency. Immediately went through it. That acts now as an inversion for value gap. So we came back into this inversion for value gap. We have the first presenting for value gap here for the New York session, and then we ran higher through this 15-minute CB. We had this rejection lower, and then right now we've had the opening price right here, and we've gone higher. So you can obviously see the first present fair value gap here for today. It's right here, and then I'm gonna annotate that premium. I mean that's discount opening range gap for today, and then we're gonna see what we have going forward. So I'm on holiday. I'm not really trying to do a lot today. Actually, it's a 10 points challenge day 6. Last week was successful. If I could have had this trade here with this account of mine, I could not really be looking for anything, but I will be looking for another 10 points, and my bias is actually bullish. So we are trading below the middle New York opening price, but I don't really like price when it's trading above the New York session opening price. But I can still be looking for higher prices. So this is the first presented for Valga for today, right here. That is 4:30 my time. That is here in the New York session. I'm expecting a price to trade into that first presented for Valga up here and then try to run higher. And then we'll see whether we'll get into this buy sell liquidity pool resting above 24,648 level, around for 650 level. So we've touched the first present for Valiga. First present for Valiga, this low is 605. It's a very nice idea to be going long at 605 and then aim for 610, 615, not 610, 615, and then put a stop back at right here. But we're trading in the middle of the range. I'm not really trying to be very aggressive of what I anticipate price to do this New York session. So I'm still bullish on the week. We're trading around the first position for World Cup. Let's see whether we'll get a run from 605 to 615. That would be an hypothetical 10 point run higher. So let's look at. I want to look at the buy sell liquidity pool, or rather, let me look at where you see that's a 10 point run higher to 615. 614. I'm gonna run to 615. Boom, there we go. That's a 10 point run higher. Beautiful, beautiful run from the first present for Valley Gap running higher with the bias on side and everything else running into. We want to see price run into this relative equal highs right here, and then these ones here, and then we'll see whether we'll make another high. So very nice run higher, 10 point run higher. Beautiful, but that's just an hypothetical. I've not really executed on that. That's something that I will really want to venture into. So I'm not really taking that trade because we are trading in the middle of the range, and normally I love to look at the deepest of deep discounts to buy from and the deepest of premiums to be selling at. So this is a buy sell liquidity pool right here, and we've managed to get away from that fast present for value gap. So if we have another gap here, I'll try to buy that gap, and then we'll see whether price will wanna reach into 650 level. Remember, we're trading at 620. We're below the midnight new opening price. We're going higher. We have a buy side imbalances and efficiency at the first present for value gap for today. This Monday's first present for value gap, I love to extend it throughout the week. So we bring into that first present for value gap. We're running higher. So we have buy sell resting above 650. Talked about that, so I want to see price run into that 650 level. So I wanted to look at the opening range gap for today. Remember, we've opened up right here, so it's obviously is it a discount? Yes, I think it's a discount opening range gap. So there we go. So that is 582.9. And this discount, I love to put it as dark olive green. So I want to go to a 15-minute, and then I want to take that is Friday's close. It's right here. So we've run through that fast present for Valley Gap. And actually, you can see we've ran also to the high of the opening range gap for today. Right here, I want to also annotate the midpoint of that opening range gap. So the midpoint is 24,600 even. You see how that comes into place. Right there at 430, right there. So let's go to a 1 minute. So we've gone through the first present value gap, very interesting. So I also was looking at this 15-minute sell-side balance based on efficiency. It was one of the targets. It was a premium PDRA. So we, after moving from this consolidation down here, we went through this CB and we've gone through that into that buy side and eventually into this inefficiency here and above that high. So we've ran through the first present value gap. We're running lower. So I want to see price head again through the first present value gap and then we'll try to reach higher. So there's a rejection from that first present value gap. Let's see if we'll run into these lows here. So I don't really know where price will run lower into. We ran into this inefficiency here. This was an inefficiency from London's trading. This sell-side balance based inefficiency. That's what is highlighted right here. So we've ran into that inefficiency after trading to the first position for value gap. We tried to go higher. I was really anticipating price to run into this buy side, but you can see it's we're trading lower now. So we've gone through that first position for value gap. Let's see whether we'll reach. We'll go through the whole um, discount opening range gap. So I already talked about how I'm anticipating higher prices. So if we go through these first present for value gap, I'll be buying that first present for value gap high. So we've run into this inefficiency here. This one from London. Again, I'm also looking at this one here. I really want to buy this midpoint of today's first present, opening range gap. So right here, I want to put a buy order. So I want to see price go through that first present for value gap. So I'm buying that. And then obviously I'm putting a 10-point stop. And then I'm aiming for another 10 points. So we're going through the first present for value gap once more. So I don't know whether price will come and tag my limit order right here to be buying. This is a very nice run higher. So if price comes back to the first present for value gap, I'll be buying it once more. And then I'll be anticipating price to run this high here. These are relatively equal highs right here. So I'm gonna buy that immediately if it touches the first present for value gap. Boom, see that? There's a buy. That limit order of mine could have been filled right there. But you can obviously see it has really gone by fast, and I've not really got a chance to be a participant of a buy right here on the first present for value gap. So I'll put a buy limit there. I'm not really racing. I'm not really if it goes without me, it's very okay. I'll be anticipating another sell after it has taken this buy side. So we have another inefficiency here. I'm still waiting for it to come into this first present for value gap, and then I'll be buying that. So we've gone lower. We did not trade. If you notice, we did not trade to the lower portion of this discount opening range gap. That's very important. That means that the market is really bullish, and we've just gone through the first present for value gap, and we've gone through it. I've talked about how I'm anticipating price to run into that first present for value gap, and then I'll be taking only 10 points higher. So let me just modify this. So my stop loss is minus 10 here. That is 24,595.1. That's a 10-point stop, and then I'll be taking that at 15 right there. So I have my limit order right there. I want to see price go through into that fast present fair value gap and then go higher. It might not do it. I'm not really interested if it doesn't do it. I'm not really going to chase it higher because I know it can run those highs here, and then we can also run into that 650 level without me. So I'll be looking for another buy side imbalances and efficiency to be going long in if it doesn't come back into the fast present fair value gap and and take and put me into that trade. So the time is 4:45. The New York session is 9:45. Let's look at a 15-minute chart side by side with the 1 minute. So you can see the 15-minute chart where it's really bullish. And I've already talked about how I am bullish. I'm expecting higher prices. Everything is bullish on the weekly chart. On the daily chart, we are bullish. Remember, we've rejected that midpoint of Thursday's constant encroachment, or rather Thursday's premium week mid midpoint of that week. We've ran higher, and now I want to see price run higher. It's really spending a lot of time on the upper portion of this efficiency. Let's see whether we'll run into that fast present fair value gap here once more, and then we'll start running higher. So 15-minute chart, you can see how it's really bullish. So we ran lower. I was talking about how this was a buy right here. And I've talked about how this candlestick here retracing into the fast present fair value gap, that's a buy right there. Boom, buy it. And then we've ran higher. Although we've had this downward candle here, but from this fast present fair value gap low, 24,605 even, we've ran into 615 and we're trading at 616 now. So we have buy side resting on this high here. This high here is these highs here, but I want to see price reach into this high here, that is 24,632 fast before even it goes into 650 level. So getting a retracement lower, we've not touched the fast present fair value gap. I think this is gonna run higher without me. And sometimes you can't chase it. So you can see high. We went to the midnight New York opening price for today. That's 624,626.7. Beautiful right there. So I'm looking at NQ only today. I'm not gonna look at ES. I'm not interested in Nasdaq. So buy side resting above 650 level. So we're trading higher. This order here is not really interesting to me anymore. So this right there, this was a buy. I talked about how this is a buy. That's a 605 level, and my model is to take 10 points out of NQ every single day. 10 points only. So from 605 to 615, beautiful, run higher. This candlestick's high, that is 621. This candlestick's high, this is 616. So 2 minutes, and you're done right there. So if we're above this high here, I've talked about how we have a buy side liquidity pool here. So I want to see price run into that buy side. That's 24,648.8. So again, I've talked about how I want to see 632 ran out. We made this high at 632.9. This candlestick high, that is 632.1. So we have a buy side imbalances and efficiency here. The low of this candlestick is 24,623.7. Let's say you'll get around that in efficiency and then run higher. You see that just tripped that inefficiency. And I want to see price run into 24,648.7. So if we go above this buy side here, it's not really like I've missed anything. I've seen price do these things a lot. I've seen price do this thing a lot. So it's not really like I've missed anything. I'll still be anticipating a sell because we will be trading at the current daily high. This high is 643.2. This is 649. This high here, that's 649. So 642 is also a very nice level to be taking profit at because it's the current daily high. We're trading on the midnight New York opening price for this week. You can see how they've priced in orders right there, and it's trading higher. That's algorithmic. That's algorithmic right there. So from 626.5, you can see how it was we're running higher. So there's no inefficiency on this price run higher. There's no inefficiency, and it's not really looking like it wants to run this high here with vigor, because if you look at this high here and this low here, the current daily high and daily low, we are trading at a premium. We're trading at a premium. That's why I was looking for a very small 10-point scalp from the first present for value gap trading higher. So we did not trade into this lower portion of this discount opening range gap for today. Very, very nice very nice indication that we are trading higher. We are really bullish. So I'm expecting that buy side to be taken out in a few minutes. So that is 649, around 650. You can get in at you can get long at 640, but that would be me buying at a premium, and that I don't really like that kind of I don't like those kind of buys because you're buying at a very deep premium. So I'd rather be selling from these highs here than be buying. So I'm not really chasing price higher. So what I can do is wait for price to go above this buy side, that's go above 650 level, and then we'll be looking for something like an inversion for value gap to start going lower. But remember, the market is bullish, and if we trade above 650, I think we're gonna go into an all-time high. Yes, because that's this is an all-time high here. Look at that. This is an all-time high. This was Friday's high. This is an all-time high. So we are trading really at a very deep premium. Even though price runs at a premium, I will only be looking at I will only be looking for lower prices. So I missed this here. Price was really too fast, and then I had my limit order right there from the first present for value gap trying to look for a buy, and you can see how it's really trending very, very sluggishly. But eventually it's gonna reach into that buy side above 650. So there we go with T640. I'm not gonna buy this 640, even though I know these are very, very small margin and it's gonna run there fast. I'm just not gonna buy that 640 level, because you can buy that 640 and then it comes all the way back into this range here, and you wonder why it did not run higher. I've seen price behave like that. So there we go, 645. Just 1 minute. 645, 646, 647. That high is 648. We've reached into 648, and you can see how it's uh, having a very difficult time trying to go into that high. So remember, it can do a retracement all through here and then even trade back into the first present Fibonacci gap and even take out this low. It can, because these are deep premium. So there we go. We are back into 635. That's wild. Just like I've talked about it. Early on in my tape reading studies and um, my trading, I used to cast price when it does this kind of things. When I anticipate it to go into a buy sell equity pool that I'm really looking at, that I'm really anticipating for it to run into, I used to be very frustrated. I used to be very frustrated when it does this kind of things. So it runs so close into a buy sell equity pool or a sell sell equity pool, and it never takes it out. And then it gets these huge retracements, and I will be like, why is it doing this? So we're trading at above the opening price, we're trading at a premium. That's why it's doing all this. Remember, we can go through that, but this is absolutely normal. I've seen this here, and I've just explained it why I'm not really gonna go long at 640. I've talked about that. Talked about how I'm not going long at 640, aiming for 650, because what's this high? This is just 648. Remember, you're not filled in, and we are back into 630. That's a 10 point. That's a losing trade basically. So we've reached so close into that bicep. Let's see whether we'll reach us back into this range. So we have 3 minutes until we click in the silver bullet. So I can expect the silver bullet to run into this inefficiency and then to start running higher, because this is just a normal retracement in lower. So that's trading at 630. So the opening range for today is this low here where we opened up, this swing low here, until we've had this swing high here. This is the opening range. And the first present of value for today is at a discount. If we take this range from this low here to this high, the first present of value for today is at a discount, and it's at optimal trade entry. See that? So you can also anticipate price to come back into this and then run higher. If it does that, that will really be absolutely normal for me. It will really be normal. So we ran back into today's midnight York opening price. We will hit that level. We're trading higher now. So I want to see it go into this, go after this buy side here very strongly. So we have a swing low here, beautiful. So I want to see a very huge candlestick here running that high. You can see. So from 6, this candlestick here opened at 637.2. And we're trading 642. So I want to see it run into that buy side at 650. So we're remaining with a few seconds, and then we'll start the silver bullet time period. There we go. We've opened up. We've not run that high. I was really expecting that candlestick right there to open up and go through that high, but you can see, obviously, see it doesn't. So right there, it's gonna go above that high. No, it still doesn't. This is very interesting. Very, very interesting. Today, actually, we had, I think we had the medium impact news. Let me just check it out and then we'll see. All I know is tomorrow we have flash manufacturing PMI. We have PMI numbers tomorrow. Today we have dollar index. Yes, we have FOMC member Miran speaking. That's midday in the New York session. So it's going to be very interesting how we see price behaving at midday New York session today. That's at 7 p.m. my time. So we're running higher. These are relative equal highs here. These are retail stops here. People think that now we've gone through that. We're not going to go above that high. They're selling it and they're putting their stops right above that buy side, not knowing that we're going to reach into that high here. So we've reached basically, we're reaching into Friday's high. We're reaching into a new all-time high. So I've only had one opportunity to do something today, but I've not really, I've not done it. I've not done it. I've had an opportunity to buy this first president Fevali Gap right here, take 10 points out, and then we went through it. We started trading above it. Right there, there's a buy. Right there, this 443 candlestick, there's a buy right there. There's a buy. And then we started trading higher. Down cross candle, we're going higher. And right now, we traded so close into that high, retracement lower, and right now we've gone above that buy side, just like as I said it, just like I talked about it. So we're going to still run higher. You can see the 1 hour chart. We ran lower into these buy side imbalances and efficiency. You can see the bodies. You can look at the bodies, and then we've gotten this very huge strength running higher into this buy side. Beautiful, beautiful run higher above 6,000. I mean, 4,650. Beautiful, a beautiful run higher. So we're gonna devour that high here still. So it's Monday. We're really bullish. Um, something that I'm looking for is right now that we've gone above that buy side above 650. I'll be looking for something like an inversion for value gap, and then I'll be looking for a short from the daily high, the current daily high, trading lower. But it must show me that it wants to go through that inversion for value gap um, and then reject the cost of acknowledgement of the lower portion of that first, I mean, inversion for value gap, and then we'll see whether it wants to trade lower. Then I'll be taking 10 points out of that move. Otherwise, if we don't form the inversion for value gap, I'll still be anticipating price to trade into these fast position for value gap for today, and then maybe get another bullish run higher. So let's look at a 15-minute still. So I've already said I'll not be looking at ES today. I'll not be looking at US 500. I'm only studying NASDAQ today. So this buy side liquidity pool is out. Let me dim this out. So we popped into that bicep. Remember, these are now these are new all-time high. So we're running lower. We've run into these down close candles here. You remember we have this whole range of down close candles. Let's see whether we'll go into the lower portion of this range, or will still remain on the upper portion of this range and still gravitate towards this high. So we are inside the silver bullet time period. Silver bullet time period, I normally anticipate something like a continuation of a price run. Normally, I anticipate a continuation of a price run that I'm looking for. But now that we are in all-time highs and price, it's Monday. We are bullish, so I'm not really trying to be. I'm not really trying to be a lot very weak in today's price action, because I can really be very wrong with the weaker prices because it's Monday and we are anticipating higher prices. Unless we start to reject these highs here with an inversion for value gap, or with a sell-side imbalance based on efficient that is being respected, that's the only way I'm gonna go short. But right now, I'll just be looking at it as it grinds higher and higher and higher. I don't really care um for how long it will go higher, but I'll just be looking at if it forms an inversion for value gap. So I'm anticipating something out of price action. If it does not happen, I'm not really interested. And you'll really be surprised. They happen. They happen. What I'm talking about, it's coming. It's coming. I'm not really pressured to be doing anything. I'm waiting for something to happen, something that I know it's coming, and then right there and then I'm gonna be executing. If it doesn't happen, then I don't do anything. I just look at price and how it is forming these candlesticks, and just desensitize myself with this kind of price action. Because to me, I know this kind of price action is not something that I'm looking for. So I'm looking for something that is consistent, something that repeats over and over again, something that I'm able to see. And when we're trading at something like at these price points here at 650s, at all-time highs, I know we are trading at a premium. Even though today is not on a Thursday or on a Friday, it's not really the end of the week. We can still go higher and higher. We still have the daily high, and we still have price when it trades into the daily close. So that kind of thing happens even in a session. So we have the session low, we have the session range, and then we have the sessions high, and then we have the sessions close. So the power of three happens in a session, it happens in a day, it happens in a week, and happens in a month. I mean, it's all over. That's the narrative behind smart money. That's the narrative behind smart money. So besides that narrative, we have also things that you normally look for in price to help you come up with to help support, not come up with anything, but to help you support that narrative. And those are the things that you want to be looking for, or you want to be learning, and you want to be training your eye to see those kind of things. So when price does not really do those kind of things, you are constantly reminding yourself that you are looking for something, and when it's not there, you're not doing anything. It's that simple. It's basically that simple. So we formed a high at 26,654.8. We've gone above this bicep here, and you can see how it's really sluggish. It's really sluggish. It's not really trying to reach anywhere. So we are stuck above 650. So we have a swing high here. Let's see whether they'll keep that swing high. And we have this swing low here. between these two price points. Let's see which one will be taken out first. So if we take out this swing low here, it will really be very important to me on how price behaves after just taking this low out. Remember, we have an FOMC member speech coming up at midday in New York, so it's very important to be very important to be aware of those kind of news events that come into the market. So we've gone below that low, very interesting run lower. So again, I said I want to see how price will behave after it's just taken this low. I've just talked about this swing high here and this swing low here. We've gone below that swing low first. So I'm interested in how price behaves after it has run that low. So you can see we are still we are still with lower prices now. This is a very nice rejection lower. So this is setting up something that I can look for, something like a run lower now. So from this swing low here to this swing high here, I talked about how we have this opening range for today. This is the opening range. This is the opening range gap. So this is not a gap. This is the opening range from this swing low here to this swing high. So we've been trading on this premium for quite a few minutes, and now we are trading lower. So this candlestick here is going to close with a sell side imbalance based on efficiency right here. So immediately it closes, I will annotate this inefficiency here, and then we'll be looking at how price will want to behave if it comes back into this inefficiency. So there we go. So let's annotate this. So I'm going to extend this out to 30. There we go. And then I'm going to get that midpoint of that sell side imbalance based on efficiency. Let me extend this to 35 so that it can match that midpoint of that efficiency. There. So we're back into today's mid New York opening price. That's 625. And if we really run low without coming back into this inefficiency, I'll be anticipating price to run back into this fast present fair gap. Let me delete this 15-minute inefficiency because the narrative around that 15-minute efficiency was over. Even this one here, this is not supposed to be here, but let me just assume that. So we formed this sell-side imbalance based on efficiency. It's very important to for me how price will behave if it runs into this inefficiency. I don't really want to see it head into the upper portion of this inefficiency. I want to see it head into this candlestick's high is 24,637.2. So it's 637. I want to see it run into that 637 level and then start rejecting lower. If we go through that inefficiency and close on the upper portion, then I'll be anticipating price to run this high here once more. It's really very simple. So I've talked about how I want to see it run through here and I want to see a rejection. Best case scenario, I want to see a rejection. Something else that it can do, it can go to that inefficiency and then go to this high here. Because it can do that because we've gone below this swing low here. Very important. We've gone below that swing low and you see we've had another candle here. So we can simply go through this inefficiency and then run this high here once more. So remember, if price does not really want to do whatever I'm anticipating it to be doing, I'm not really doing anything. I'm not doing anything. I'm just watching it. So we're running higher. This kind of sticks high again. This is 24,637.2. So that's 637.2. Let's see how this candlestick here will behave. Are we running into that and rejecting that inefficiency, or are we running higher and staying inside this inefficiency and even trading to the upper portion of this sell side imbalance by inefficiency? Very, very important. So again, earlier on, when I was tape trading and doing all that kind of stuff, I used to be very, very concrete about what I believe in, and I used to be going short at certain and inefficiencies like this one. And I came to learn it. I came to learn the hard way. When the market is bullish, when you're looking at ranges, remember all other PDRAs actors have an inversion effect. All PDRAs have an inversion effect. So if I'm looking at this inefficiency and I'm anticipating it to reject price, remember it can also accelerate price, just like what it's doing here. So we've run through that inefficiency. I did not want to see it go to the upper portion of that inefficiency, and you can see where is it trading at. We're trading on the upper portion of that inefficiency. So this is a strength. This is bullishness. So I'm anticipating this kind of stick here to close, and then I will really be I'll really be and then I will have a conclusion to where price is to where price wants to reach to, just like it has done it. So this is something that I don't really want to see on this kind of sell side imbalance buy side efficiencies. So it lacked sell side, we've gone through it. So where next can it reach into? That buy side. There's a buy side liquidity pull above this high. So I want to see it run into that high. So I would really, really be like it if we had this low not pierce that one. But now we've gone to it, we've gone through that CB. So we're gonna run into that high, make another a new all-time high altogether again. So we've closed right there. We're watching this very, very small inefficiency. So we've run into this inefficiency. Again, I cannot be buying at an area like this because this is a premium. It's an overall premium. This is an all-time high right there. We've just rejected this low here, so I cannot be buying because just because we've gone through this inefficiency, I cannot be buying here because in the overall grand theme of things, this is a premium. So price can really overlap all this here and even trade below these lows. So we have a swing high here. Look at where we've closed here on the midpoint of that CB. So I want to see it run that high here. So you can see how it's running higher. So we've ran that high. Next is this old high here. So this is a very nice run on this high here. Next is this high here. And then just like I was talking about how I was anticipating price while we were trading around here, that's the same things that I'm anticipating. So I'm anticipating price to go through that high here with the very nice bicep balances and efficiency, and split that inefficiency to act as an inversion fair value gap, and then go through that inversion fair value gap very nicely, and then I'll be looking for a run to these lows. If it doesn't do that, then we are really, really bullish, and I'll not really be interested in anything until going into the afternoon session. Boom, just like that. Very, very nice run higher. So we've blown out these highs here. So anybody who had a stop above this high here, they're regretting it now. Anybody who's trying to sell this market and had a stop here, they're regretting it. So we've gone above that high here. Beautiful. This high is 24,654.8. So we made the high at 658.9. So 4 points higher above that high. So if this candlestick here closes, we'll have a very, very small inefficiency here. We'll also be looking at that inefficiency. So you can see how we've gone to the midnight New York opening price. I annotated this sell-side imbalance based on efficiency, and I talked about how I wanted to see price reject that inefficiency, but it never did that, did it? We went through it, found support right there. You can see that low here, boom, and then we ran higher. And then I talked about how we're gonna run into this high here, and you can see how we've ran into that high here once more. So we've closed that candlestick there. We have a buy-side imbalances and efficiency here. So let's see what the price will use this to run lower, or it will use that inefficiency to run a lot more higher. So when price does these kind of things here, this is algorithmic. This is algorithmic price delivery. And this actually tells me that we're going to trade a lot more higher, because you can see how we remained on the upper portion of that sales and balance based on efficiency once this down close candle here was trading. It closed right there on the midpoint of that CB, right there. And then we opened up, we ran higher. This is strength. This is strength. And then that's why I've talked about this high here. And you can see how we ran that high. So we're gonna run a lot more higher, and then we'll see what we'll have going into London close. So we're trading at 24,659. 24,658, around 660s. So trading this way is not really a difficult task. It isn't. If you did this long enough, you'll come to find that this is really it's really simple logic. It's really simple logic. And when you do it for months, I've done this for months, actually for years now. At least 2025, I've been really been consistent with NQ. Since 2023, since ICT was teaching about this stuff, and then this year is when it has dawned on me that I can be looking for 10 points consistently and pass a funded account challenge. It's crazy, it's crazy, it's crazy math if you think about it. Some days you can, when price is volatile, you can actually have more than two trades. That's why I'm not really worried. If I miss a trade today, if I miss something, I will not really be hurrying to do anything in this marketplace. I'll really be patient because you must be patient and wait for some price to do some kind of thing, and then you execute. If you really want to be consistent, you must know what you're looking for, and you must be patient, and you must be encouraging yourself. You must be clapping for yourself for you to be able to be waiting for those kind of things that you're looking for. If you're looking for PDRAs, if you're looking for, especially PDRAs, if you're looking for also, if you're looking for a certain high to be taken also that you can do something, if you're looking for a certain low to be respected so that you can do something, you must be patient. Earlier on, actually, I never used to be patient. I actually used to do something because I'm anticipating price to be doing something in the future. And that's the wrong way of looking at things. You must wait for price to do something and then you execute. You cannot be just talking about prices going to form an inversion of a value gap and then you're going long for it to form an inversion of a value gap. It will start rolling over lower and you will really be surprised. Why did you do that? Why did you do this? It's crazy price action. That's how you call it when you don't know what you're looking for. So I like the way they've left this low here. This low here has another low here. This candlestick low here, this is a swing low actually. This low is 24,623.4. So 623.4, and this low is 623.2. So we went below that low here with two pipettes, something like two pipettes. So these are still real typical lows to me. And I can expect this low here to be taken out in the future. So we've ran higher. I've talked about how I was looking at the narrative around this inefficiency. You can see how where this candlestick here closed. We're not weak. We're not bearish. We're going higher, and you can see where we're trading at now, 668. We're gonna go into 670 now. You can look at this 15-minute candlestick, and it's really, really huge, really, really huge, and we're going higher. So we've closed this 15-minute candlestick here, and now we're trading at our daily high right there. So we've gone above Friday's high. We've gone above last week's high. We're trading at a deep premium now. So it's Monday. I'm not really concrete about looking for lower prices, but I'm looking for where we can form today's high. And then I'll be looking for um, something to take advantage of. So we've fully covered that candlestick range right there. This is not really interesting to me still. It's not really interesting to me. So let's see whether we'll start rotating lower and go below this swing low here, or we'll go higher above this high here once again. That's 24,673.3. So we've gone to that 673. You can see how we're rejecting lower. We're trading at 661 now. So I'll be doing the same thing if we form a sell-side imbalance price inefficiency right here. I'll be doing the same thing I've done here, and the narrative is just the same. So we're back to 660. So we formed a sell-side imbalance based on efficiency here, very small one, very minute one. But that does not really interest me, to be honest. This candlestick's high, that is 24,664. We can roll over to 654, but I'm not really interested in that inefficiency. You can see how price has gone through it. That's the reason why I'm not really interested in that kind of inefficiency. So the next PDRA I'm looking at is this tail right here for this candlestick, this hammer, this retail hammer candlestick. I'm looking at this discount tail. So if we reject that, that will really be interesting to me. So what I'm talking about is this right here. So we really, if we want to go again below this low here and maybe devour these lows here, I don't really want to see it trade into their proportion of 24,668.4. This candlestick's high, that is 2667. So 1 point, and then we could have reached into that midpoint of that discount week. But we've not traded into that, so I'm expecting a rejection. If we're really bullish, then we'll obviously go into that week and devour higher and maybe try to reach into that high once more. That's how precise this stuff get. Mm. If I were live streaming this, somebody could be in the comment section talk about what the hell is that? Am I gonna look at all the candlesticks weeks? Yes. I mean, you're supposed to. So we bring higher into that week. So my mind is like, we're gonna reach into that high now. So that high, boom, there we go. We reach into that high once again. So trading at 675 now, 675. So this high here obviously is a PDRA. So we've taken out the buy sell liquidity pool above this high here. Anybody who's trying to predict the highs on the marketplace, they're wrong again. They're wrong once more. So we cannot be predicting highs in the marketplace, especially when the market is so strong, especially in a month like September. We can't be pointing out highs in the marketplace, even though we are trading at an all-time high. Nobody ever knows what high the market can reach into. Nobody ever knows. All we can do is just to predict price ranges which price can go into, but we cannot predict what high the market is gonna pose in the marketplace, because every single time it keep on disappointing you with another high. Every single time another high, every single day another high. So the quicker you know about that, the better. So if we run into that high here, we have a very small buy side balances and efficiency. So we've started trading into that inefficiency. We've had a swing high here now that this candlestick has closed. So I'm looking at that buy side balances and efficiency. If we go lower, then I'll be anticipating weakness from that inefficiency. So don't forget, we're basically inside the silver bullet for today, and we're trading at a premium. We're trading at all-time highs. Basically, we're trading at a premium, right? So again, I missed out these buys here from the first present fair value gap, but it's all right. It's all right. I'm never really scared of missing a move because there are very many moves that come by. Very, very many moves. So I cannot be crying about missing this buy here. I outlined it. I talked about it, but I missed it. I did not take it. I had my limit order on the first present fair value gap, but I was never really priced in. So we ran higher, we ran above this buy side, above 650, and now we're trading at 672. All this here, I talked about all this. How price have behaved here, I talked about all this. I talked about how we're really bullish. I talked about how we've opened up with a discount opening range gap, and there it is. I talked about when price was trading inside this sell side balance price efficiency from London. Go back to the chart, you'll look at that. I talked about it. We ran lower, swing low here, beautiful run higher through the first present fair value gap. Then I talked about this buy here. I was really anticipating this candlestick here to come back and repricing the first present fair value gap and then run higher, but it never did. So we ran higher and we're still running higher. So one thing that I found out is I'm not really scared of missing out. I don't really think I ever miss out on anything. That's actually the correct mindset when you come into this business. If you spend your time regretting whether if when you've missed moves, you'll actually miss a lot more other moves in the future. So I don't really regret on missing any move. So we're going to 683, another new high. Very interesting. So we're on that 680 level. Another thing that I came to learn is now that we've had this very, very huge movement higher, somebody can have a mindset, or rather, I would have a mindset like, oh my God, this is a very huge move. Why didn't I catch all of this? And then it will be like, you've been seated here for 1 hour and 12 minutes now, and this is what has really transpired. It's really, really difficult to anticipate how much higher can price go above an old high, especially when it's an all-time high. It's really, really difficult to know how high it can go. So when this price runs, um, when this price runs come to fruition, I'm never, I'm never regretting it. Why didn't I miss this? Because it's just simple. It's because I didn't know about it. I didn't know about it. I mean, nobody ever knows. Nobody knows. No one knew. Let me use the word knew. No one knew prices was gonna go into 24,680s. No one. I don't really think so. No one. I mean, it's right here now. It's right here. We opened up at 580, and we are 100 points up on a Monday. I mean, I knew this was a buy. I knew this was a buy, but I never knew that it was gonna reach into these highs. Yeah, nobody ever knew. So I'm never regretting any of this here. So I know what I'm looking for, and what I'm looking for right now, it's not there. So what do you do when it's not there? You sit still. You sit still and just watch it, and just look at it, and then maybe you take notes for something, on something like this here, something like this here. So 24,685. We have 1 minute, and then this 15-minute candlestick here is gonna close. So I'm strongly thinking that going into these I mean these London close, going into London close, we're gonna retrace lower. So I'm looking for something like a session high right here, and then we're gonna move off of that session high, trading into the session close. So New York session runs from 8:30. That's when it opens. 8:30 runs 8:30 a.m. the New York session, and then runs into 10 o'clock. 10 o'clock, 10:30. That's it. And right now it's 10:45. So this the we are really in the peak of New York sessions close. So again, going into London close, I'm gonna look for a retracement lower. It's not really gonna be very, very huge, like when it happens on Wednesday or Thursday or Friday, especially Thursdays and Fridays. It's not gonna be like that, but I'm sure we are gonna retrace 10 points lower or more. So that's the kind of thing that I'm normally looking for. So if we're running higher, 24,687. Remember, we've closed that 15-minute candlestick right there. Beautiful. So still bullish. So we're around 24,685. We managed to get into 690s. This candlestick's high is 690.1, and this high is 690.3. So we have a swing high here. If you look at this closely, this high here, there's a swing high here. Beautiful swing high. This candlestick's high, that is 23,690.3, and this high is 690.1. So that's interesting. So you can see we've gone again above that 690. We've traded into 691.2. Very nice. And then we have a very small volume imbalance here. I think we're going to go into 700, 24,700. And also at last we're going to get into 25,000. Very interesting. Very interesting times to be alive, man. 690, 691. So I've talked about this volume imbalance right here. This is a PDRA. Let's actually annotate that inefficiency. This is one of the signatures that tells me that we might trade lower. Let me annotate this as time is okay. And then right there. 79.8. There we go. Very minute volume imbalance right there. So we've gone to it right there and through it. So we're gonna see if price wants to find support above that volume imbalance and make a new high. And obviously you can see it's running higher. So we've gone and closed above that volume imbalance. Look at our price. We're trading higher. I'm trading at 695 now. So we're gonna trade into 700, 24,700. Gonna click 700. 3 points, 2 points to go to 700. 24,696 now. I'm gonna be there in a few. This candlestick's high, that is 698.9. Very interesting. So there's nothing really interesting here. There's nothing interesting here. Unless we get into these typical lows here. Let me extend this fast design for value for today throughout the entire week. That's until the Wednesday, but obviously we're gonna extend that throughout the week. So we've traded through that volume imbalance. We've made a new high right there above. This candlestick's high now is 698.9. So very nice high here. We're trading lower now. So I want to look at how price is trading around that volume imbalance. Look at how we've closed on the low of that volume imbalance. Beautiful. So on days like these here, where we have this the last 2 weeks of every month, price is really fickle when it trades higher uh, price points like this. It's normally very fickle, very fickle. You cannot really be very precise when you're looking for something like an inversion fair value gap. You rarely be precise. And I've seen where ICT normally trades turtle soups. Price goes above an all high, he's selling it. He's selling it above an all high. We have a volume imbalance or something like this here. We have a swing low like something like this here. And this isn't high, not a swing low. We have a swing high or something like this here. We've traded below that volume imbalance. So I've seen him going short in an area like this here. And since I'm aiming for 10 points, it's very easy to get 10 points out of this something like this. We've ran higher. We have a swing high here. Beautiful, beautiful swing high. We are rejecting that volume imbalance from 688. You can aim for 678. So we've gone through that here. We're back on that volume imbalance. So we're getting into the end of the New York session. We're getting into London close. So I'm expecting price to move off of the high and then trade lower into the close. So we're back on that volume imbalance. We formed a very nice wick here. I want to see price go over that week and through that week, and these are kind of like relatively equal lows. I want to see price go through that and trade into these lows. So we've gone outside that volume imbalance. Again, let's see whether we'll run into that high. Man, I can't wait to trade a gentleman's market. I can't wait. So can I be going short at a price point like this one? Yes, I can, but I must get a little bit of. I must get more confirmation that it wants to trade lower, because right now we are back on top of that volume imbalance, and that's something that I'd normally not want to see on positions that I'm short on. So we've gone through that volume imbalance, but you can see where we're closing. We're above it. So I want to see price run into around 700, big figure, 34,700. So trading at 696. So there's buy side still above this high. I'm gonna go around to that high here now. So 24,694.9. Someone's spitting 700. This kind of price action drills really are very, very important for a new trader. Somebody who does not really know how price books. It's really frustrating for a new trader who has not even understood how premiums and discount work. They will be chasing this. They will be chasing this. They are obviously chasing this higher. I mean, they might get lucky, but not every day. They might get lucky, but not every day. So there we go. We've ended the New York session. We are trading London close now. If you look at the 1 hour chart now, you can see how this 1 hour has closed on the high. Very, very huge run higher. So what are the probabilities that this next candlestick 1 hour candlestick is gonna be a bullish candlestick? The probabilities are very high, very, very high. Now that we have FOMC member who's speaking, it's called Mirani. I don't know who Miran is. I'm used to Powell, maybe Governor Bailey, but Miran is speaking, and we can have price trend higher and higher, pose new highs and new highs um, until the New York lunch hour time period, and that's when maybe we'll start retracing lower. That is not really that will not really be new to me. I've seen this kind of price action here. I've seen price open up and trade higher the whole week. Look at what happened last week. I've seen it trade higher throughout the entire day, where it opens up and then goes higher throughout the entire day. Those are the kind of days where day traders make huge chunks of money. But since I'm a scalper, I'm sticking to one form of trading, and that's I'm trading. I'm selling all premiums and I'm buying all discounts. So I'm not really scared when price does this kind of things, because this is what it does. This is what it does. I've seen it do this, so I'm not really scared. When I stopped trading forex and I came to trading futures, this was really phenomenal to me. I was really like, where have I been? And this market has been trading higher like this. I mean, if you are a day trader, you can make a lot of money doing day trades, especially in the month of September. You can make a lot doing this kind of trades here. So let's look at this run here. We've gone high above this high here. We have a very small society, I mean, buy side balances and efficiency. Let's annotate this here now, and a very, very small volume imbalance there. So let's look at this inefficiency here. So I want to see price stay below that inefficiency. There we go. So I was talking about how I used to look at this kind of price runs, and I used to be like, what the hell is this? How does price keep on behaving like this? This is a sell to me. I will sell this here. This candlesticks. This here is 24,696. Actually, I'm gonna. This is a sell to me. 696. That's 696 to me is a sell, and then anticipate 686 just below this volume imbalance. So I've already talked about why that would be a sell to me. We're trading in London close, and we're anticipating lower prices. So this kind of price runs higher were really phenomenal to my eye. They were really like crazy to my eye. They were crazy price moves. You don't get this kind of price moves in forex. Never, never. If we look at the British pound right now, we can't find this kind of price moves. So you can see we've gone to that inefficiency. We're running lower. This candlestick's high, that is 696.2. We've gone into 686. You see that 10 points right there. Beautiful, beautiful 10 points. So these 10 points, those are 20 points so far. So we've gone into that volume imbalance once again. You see that? This is London close. This is London close. Everything is just a matter of time. Everything is just a matter of time. So I was talking about how you cannot get this kind of price runs in forex, but when you come to futures, we really have a real premium and discount market. Inside we have a real power of three coming in every single day. If we have a bullish bias, we're gonna have the low, we're gonna have the up, we're gonna have the low, we're gonna have the high, and we're gonna have the close. And when you understand that kind of price action in terms of session trading, in terms of day trading or weekly trading, so now you can be any kind of trader that you want to be. You can really be any kind of trader you want to be. Now I settled to scalping because It's just you don't have to wait for long for your position to pan out. You don't have to wait for long. We have relative equal lows here. That's beautiful. I'm gonna go below those lows now. We've pierced into those lows, but let's see whether we'll come back into that volume imbalance and get another run lower into this range. So you can see how I've talked about this sell here from that 696 level and to 686 just right now. I've talked about that, and this is 1 2 3 minutes, 3 minutes, and you get your 10 points, and you run like hell. You run like hell. So we've gone below this volume imbalance. We have relative equal lows here. I've talked about that. We've just pierced those relative equal lows. We have a sell side imbalance based on efficiency here, a very small one. So let's see what the price will get into this here and try to rotate into these lows. It can really be a very uncomfortable thing to be talking about all this, and then you go into the marketplace and make a loss. It's really uncomfortable. So anyway, this candlestick's high. This is 24,688. This candlestick's high. This is 697. It's really difficult for me to be going short right here at 698 because you can retrace as much high into this inefficiency. So this is 688.3. This is 697.2. So if you want to finesse this here, you can finesse this as these candlesticks high, maybe entry, sell at 694, and maybe and split around lower. But we've run into that high here. So let's see whether we'll come back into this inversion for value gap. So running high, I think I want to sell this here now. I want to sell that, stop at 10 points, and then get my take profit at 10 points. 10 points, 10 points, and I'm doing a 1 to 1. So these are $30. These are $30 loss, and we're just sitting still. So these are relative equal lows here. I want to see price head into these relative equal lows. So we're back on this volume imbalance. Look at where the bodies are closing. So I've actually gone short at around 690. Is it 690? Yeah, but my stop is above these 700. Yes, I've gone around 690 short. I'm waiting for this relative equal lows here. That's around 680s. Take profit on 680 right there, and that's it. So I'll want to see price reject that volume imbalance, but you can obviously see we've gone above it. But I want to see it reject and start trading into these relative equal lows here. So this low is 24,681.4, 24,681.4, and this low is 681.9. This is 681.4, and this is 681.9. So that 0.4 level, I want to see price go into those lows. So you can see right there, very, very nice run lower. So have I even filled? Let's see this. Not yet. So we're gonna go into that, to these lows. So when price trades like this here, I wanna take my stop to break even, because I want to see it run into those lows there. So this inefficiency here, something that I love to see. Boom, there we go. Another random out of position, right? So volume imbalance here, we run higher, we have an inversion for value gap here. I talked about how this a sell, we ran lower. We've run into that volume imbalance right there. As we were trading into this inefficiency here, this is a sell side imbalance based inefficiency. I'm going short right there, and you can see we've gotten that run lower. So how many minutes are this? These are 1, 2, 3, 4, 5 minutes. 5 minutes worth of weight, $30, right? Beautiful run lower. So this is basically power of 3. We open up right there, we make the low right there, we run higher, run higher, run higher. I talked about how I want to see our price run into London close, and we run higher. We form an inversion for value gap once we run above this high here. We have a swing high, beautiful. We have a volume imbalance. We run lower, back into that volume imbalance. I was really anticipating price to run into that inversion for value gap. You can, I can allow for that, but fortunately we didn't. So we ran into that volume imbalance. I'm going short. I'm aiming for 10 points. Run lower. I told you it's gonna happen. I told you it's gonna happen. So 10 points challenge day 6. Right there we go without 10 points. So that's a buy. I mean that's a sell at 24,689.9, 689.3, sorry. And then right there take profit at 679.3. Beautiful, beautiful 10 points. Beautiful 10 points. 679, 689.3, 679.3. Beautiful 10 points. And that's all I have to do for a day. This is all I have to do for a day. So I think that's I'm gonna leave it at that. And one question for you: if you make 10 points right here, 10 points right here, trading into that high, first percent for value gap run higher, 10 points, and then you leave alone this one here because I was anticipating a run lower, but we didn't get a run lower. We run higher, we have an inversion for value gap here. We reject that inversion for value gap, we have a volume imbalance. These are 2 PDRAs right here. We reject that, and then we run higher into that sell side imbalance based on efficiency. That's another sell, 10 points here. So get 10 points here, 10 points right here. Risking 3 points per $3 per point. Those are $30, $30. Those are $60. From where I come from, that's a lot of money for somebody who just sits around and does this kind of things. And building experience of this kind of narrative is very, very important. So anyway, I have to take screenshot, and then we're gonna close this up. So I'm gonna look at this 15-minute, and then this I'm gonna take this screenshot right here, and then I'm gonna study this and remind myself that what I was looking for, it's actually there. So right there, volume imbalance, we run lower. Inversion fair value gap, I talked about this here. We run lower below that volume imbalance. We're going higher. Sell that inefficiency plus volume imbalance. Stop right there. Take profit right there. Boom. 1, 2, 3, 4, 5 minutes. So I'm gonna leave you to think about that. So I'm gonna close this right there. So until next time, adios.